Hello, I'm Angeline Ong, and welcome to your look ahead to Wednesday, the 24th of January. Now, Japan is a big early event risk here with the trade balance numbers. Why this is an interesting data point is because we just had the Bank of Japan maintaining its ultra easy monetary settings, but signaled its growing belief that conditions for phasing out its huge stimulus are now falling into place. Now, this suggested that an end to negative interest rates was nearing. Bring up the Nikkei for you first, because the Nikkei has had a really strong run since the October period, like many of the other indices. But the Nikkei itself, if I can draw a longer term view, is up at multi-decade highs. And let me see if I can give this a bump to the monthly view to show you that picture. Widening it out there, perhaps maybe even in terms of years, if I may. And as you can see, it's had quite a run up, and we're now near highs not seen since around the 90s. I also want to show you the yen, because the yen versus the dollar, also interesting there. Let's get you our daily chart, because the yen, and this is an inverse chart, the yen has been rising as markets start to price in this exit from negative rates in around March, April period. Now, as I mentioned earlier, economic news is the big sort of driving force on Wednesday, not least because we have flash PMIs from the eurozone, the UK and the US as well. These are for manufacturing and the all-important services sector as well. That's been, bolstering the economy, as manufacturing is still slow at getting started again. From Canada, we've got the Bank of Canada interest rate decision. No change expected there because, like many major countries, that stubborn and sticky inflation seems to be creeping back in. So really what they say will matter more than what they actually do. From the US, look out for the EIA crude inventories, oil slipping back below 80 a barrel after settling above the threshold on Monday for the first time since December 26. Just showing you US crude there, if I may, and we are seeing this easing, and US crude at 74.12 there. Traders, though, are keeping a close eye because there's so many things that are happening in the oil market at the moment. Geopolitical tensions, well, that could change at any point, and also supply outages in the US and returning production in Libya also give this financial instrument a bit more volatility. From the UK, we've got some trading statements due. JD Wetherspoon out with second quarter numbers, and also EasyJet out with its latest trading numbers. Let's have a look at EasyJet, because this sector has been fascinating of late, because they had a really good run the last year when we saw that revenge travel still in play. However, shares in EasyJet and the other big carriers as well did see a bit of volatility back in December. Just try and get that chart back to December for you, early December there. This was after JP Morgan said it preferred low-cost carriers over network airlines. It's sticking to its neutral rating on EasyJet and Wizz Air, but has double-cut Air France KLM to underweight from overweight, and British Airways owner IAG to underweight from neutral. Now, going forwards to tech, we've got out of the Netherlands ASML out with fourth quarter earnings. And from the US, the real market movers here, they happen later in the session. We have Tesla, IBM, and also AT&T. And just showing you Tesla's chart here, because there's been a great deal of volatility ever since we hit that high point there seen last July. A lot of momentum indicators there showing lower lows and this falling trend channel, as you can see here. And if we don't break through some of the key levels here, like the 24,140 mark, and we continue to break down below the 2923, then we could see further downside to come, as you can see here from the green line that I've drawn on all the last two bottoms. Falling prices of battery materials expected to let Tesla show a slight rise in profit margins, as these are for the earnings. However, pay attention to what it says about volumes. Don't forget, Chief Executive Elon Musk has signaled that in the last year, he was willing to sacrifice margins for sales numbers. However, this might have changed now, given we are now in a different storyline for the Fed, especially with interest rates potentially coming down in the first half of this year, or at least the second half. Also, watch out for what Elon Musk says about more control. He wants more control, raising questions amongst governance experts and retail investors over the company. And that's it for now. For more market moving news, I'll be back on Beat the Street at 13:30 London time to give you a heads up to all the tradable news ahead of the open. And IG's Jeremy Naylor will be doing the same for you at 7:30 on early morning call ahead of the European market open. Follow me on Twitter at Angeline Ong. This is IGTV.